Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast, the show that brings you the latest insights, thought leadership, and stories from across the global mining industry. In today's show, we have Jeff Clark, renowned precious metals analyst and editor at the Gold Advisor. Jeff has spent decades helping investors navigate the gold and silver markets, identifying opportunities across the mining sector, and providing insights into the macroeconomic forces driving precious metals. In this episode, we're going to discuss what's driving the current gold and silver bull market, where investors should be focusing their attention, and the key catalytics that could shape the sector over the coming months, and a lot more discussion around the precious metal space. So we've got a lot to speak about. Jeff, welcome to the podcast. How are you?
I'm good. It looks like I'm vibrating there, but I'm not vibrating. It's just the camera. So
Okay. No
I'm
worries.
glad to be here, though. There's a lot to talk about.
There certainly is, and as we were just speaking off air, I've been listening to you probably for the last 5 or 6 years. But for those that are listening to this episode from people from all around the world, I just wanted you to just tell us a little bit about yourself, a little bit about your career, how you got into this space, and how your sort of career and journey has got you to where it has to today.
Yeah, Rob, my dad was actually a gold prospector. He wasn't a geologist. He didn't work for a company, but on his own with a group of guys, he had some nice finds in his career. The biggest one was this giant piece of white quartz with gold weaving throughout it. It was a beautiful piece. And we estimated it had about 3.5 ounces of gold in it. So he loved it. Eventually broke it down, made jewelry out of it. But he had a lot of fun. And then I went to work for Doug Casey's firm, if you know that name. Myself and Lobo Tigre were the metals group under the Casey Research banner. That was a lot of fun. Worked for multiple, bullion dealers, including Mike Maloney at Gold Silver, and also other newsletters. Went out, decided I knew what I wanted to do and what I wanted to focus on. And people kept asking me, why are you picking this stock and not that? How do I find out what you're buying? Started the goldadvisor.com in the middle of COVID, but it's been very successful. So I'm really happy and I love what I'm doing.
Great. Let's speak about gold first. And obviously, gold continues to make headlines with obviously record prices, while silver appears to be lagging behind. How do you view the current setup for, I suppose, gold versus silver? And where do you see the greatest opportunity for investors today?
Well, if you look at the gold silver ratio, the gold price divided by the silver price, today, as you and I talk, it's about 63. The long term average is about 55. If you go back to 1970, the average is about 50. So the opportunity is clearly still favoring silver. It fell to 35 in 2011. It fell to 20 and below in 1980. So if you believe we're still in a bull market, then silver does provide a greater opportunity. What we do, of course, is focus a little less on the metal, a little more on individual mining companies. We're all about trying to capitalize on, compelling opportunities we see with companies. In my opinion, the bull market is not over. We can talk about that, but for that reason, I'm buying both gold and silver companies.
Yeah, before we speak about obviously the companies, if you look at the broader macro environment, if you look at obviously interest rates, debt levels, inflation concerns, geopolitical tensions, what do you believe is the biggest driver behind precious metals right now?
That's a great question. Everything you mentioned, other than debt levels, are short term issues. They're short term catalysts or barriers to the gold and silver price. So those things are like, interest rates, inflation, geopolitical tensions, and other things are like a jet ski in a harbor that you rent for an hour versus the financial system that has not reset, the debt level that hasn't been dealt with yet, monetary concerns, the fact that every currency in the world is fiat. Those are like a barge in a harbor that's trying to negotiate a 3-point turnaround. It's going to take all day and affects everything else in the harbor. That's what we have with the debt levels and the fiat currency issues. It's going to affect everything else. It's a big picture concern. So, in the short term, there's going to be a lot of things that are going to push the price around, both up and down. But in the end, we still own gold and silver. We want significant exposure to gold and silver because of the big picture concerns of interest rate and fiat currencies.
And having to listen to you over the years, um, I often hear obviously the gold price is obviously going up, but that's in relation to the amount of money being printed and circulated in the economy. So I just wonder if you can just tell us the relationship with obviously debt, an increase in debt, and the price of gold, because gold, an ounce of gold is always going to be an ounce of gold, but the price changes, and it's obviously based on the debt levels and the increased money supply. So I just wonder if you can just
if
comment on that.
Yeah, if you chart those things out, you compare the rise in the gold price to the rise in debt. If you compare the gold price rise to the rise in uh, any kind of money printing, you will see a direct correlation. They are directly correlated, which means because debt level is not going to go down, it's only going up. We're not dealing with it, that it's reasonable to expect the gold price to continue to rise over time. Same with money printing, however you measure it. We're going to have to print money again. The US and other countries are going to have to do that in order to maintain their the lifestyle those countries have become accustomed to, just spending money, right? Which means the gold price is going to rise over time. So there's a direct correlation, and only if you believe the debt levels and money printing are going to come down or not happen, would you sell gold? Otherwise, you would buy gold.
What is your obviously we talk about stocks now. What is your sort of main criteria when you're analyzing and picking stocks to invest in?
That's a great question. So, a quick story, I had a friend who pinged me one day and said, "Wow, did you see XYZ company there, this drill hit that they put out?" And I had not seen it. And it was a really good drill hit. But what I wanted to know was, okay, well, who's behind this and where is it? Well, it was a pro mining jurisdiction, but I looked at the CEO, and he had awarded himself millions of shares in his company previously. He didn't buy them. Now, he did invest some of his own money, to be fair, but he awarded himself millions of shares. And that really turned me off. And I talked to another analyst I have a lot of respect for, and he's like, "Oh, yeah, that's a no go for us. We're not going to invest in that company simply because of what this CEO had done." And it became a non starter for me. The company's done okay. It is growing, it's following the market up. Uh, but I would not invest in that. Look at it this way: these junior stocks that we invest in are already high risk investments. Let's take that risk and lower it. And so, what I want to start with in the three legs of the stool, the people, the politics, and the project, in that order, I want to look at the people first. Have the people running this company done what they are trying to do here? Have they done it before? If they haven't, your risk just went up. Is the project in a pro mining jurisdiction? If it is, great. If it's not, your risk just went up. Is the project itself like my grandma's chocolate chip cookies, big and rich? Uh, if it is, great. No guarantees, but that obviously puts you in a better position. If it's not that way, your risk just went up. So let's reduce our risk instead of increasing our risk, and that's how I look at this.
And if you're looking at obviously looking at companies, is it the management team? Is it the jurisdiction? Or is it the resource or drill results that you would then favour?
Again, it starts with the people. Again, that big drawer hit that my friend told me about, it's great, but I'm not going to invest in that. simply because of what that CEO had done. It's a non-starter for me. I wanted to reduce my risk. So it starts with the people, and it does go in that order. Then I look at the jurisdiction. You can't move the mine, so you need to be in a region that protects and has has a long history of protecting property rights. And then I look at the project.
This episode is sponsored by Mining International. In today's market, finding the right mining talent isn't easy. Mining International works closely with mining companies to identify and secure senior and technical professionals through a tailored search approach. If you're hiring or exploring your options, you can contact Rob Tyson via the show notes to start a conversation today.
How should investors be positioning themselves at this stage of the cycle? And are you sort of favouring producers, developers, explorers, royalties, or even physical metals? And I suppose what are you suppose focusing on more than others?
Well, I look at it as we're looking at individual companies. So I'm not looking at the different stages that we might be in. Um, Now, to answer your question, we did see a lot of capital move into the producers and some into developers and some into the juniors. We had some 5 and 10x stocks through January of this year, which has since cooled. So there has been capital rotation into some of the juniors. But that, we're in a correction mode now. We're in a consolidation mode. So that process has got to basically restart. When money starts to move back into our sector, it will first come to the big names, maybe the royalty companies. Then it'll trickle down to developers. Then it'll trickle down to um, the explorers. So that process is still ahead. But again, I would focus more on the companies themselves, which have compelling dynamics right now. Who has major catalysts on tap right now? That's what we're looking for. That's what we're focused on.
Mining stocks have historically lagged the metal price early in a bull market before obviously eventually catching up. Are you seeing signs that capital is starting to flow back into the sector? And where do you think we are in the cycle today?
The answer is not yet. And that means we have an opportunity in front of us right now, this summer, while prices are down and cooling. Um, Rob, if you look at the gold to the NASDAQ ratio, the gold price ratioed to the NASDAQ price, did you know that in that ratio, the gold price has basically not risen? It's lower now, believe it or not, that ratio than it was in the COVID bounce in 2020. It's lower than it was in 2016. It's lower than it was in 2011. It's certainly lower than it was in 1980. The gold price basically hasn't risen. That means there's a lot of catch up that the mainstream and Wall Street investors have not really come into the gold sector in any meaningful way. And you have the same thing with gold stocks to gold. Gold stocks relative to the gold price, that ratio is lower now than it was during the 2020 COVID bounce, than 2016, than 2011, than 2011 when that bull market started, and certainly lower than 1979, 1980. That means gold stocks as a group have not moved relative to the gold price, and therein lies our opportunity.
And when do you see that pivotal moment when more money will come into our industry and into the precious metal space?
The simple answer is when the general stock market, when the broad stock market, the Dow, the S&P, the Nasdaq, and other exchanges around the world, when they weaken, when they correct, when they fall and stay down, if they crash, if they go into a bear market, at that point you'll have Main Street and Wall Street looking around for opportunity. Where do we invest that we can earn a profit? And they're going to look at the gold mining industry, and they're going to see that despite inflation going up and costs going up, that the margins are incredible. As of Q1 this year, the margin on mining stocks was the highest it's ever been in history, the
Yes.
highest percentage we've ever seen. That means, I mean, you chart that out. Anybody can chart that out, and Wall Street will chart that out, and their eyebrows are going to go up. They're going to look and see, wow, look at the opportunity in this sector. Let's jump in. That'll be especially true if gold is in the middle of its next up leg. That may not happen till the fall or later, but the point is, when I think this will happen, we'll see major inflows of capital into our tiny little sector once the general stock market goes weak.
Yeah. And how big is our sector compared to other sectors? Again, because I've heard that before. Our market is so tiny. What is the percentage of the precious metals or even just the mining industry compared to all the other industries out there?
I have a chart of that somewhere that I updated for the last conference, and it's kind of silly just how puny this sector is compared to every other sector. If you compare it to, the oil and gas, for example, it's like 1/50th or something. Um, I think the number for gold stocks was about 300 billion, the total market cap. Well, almost any other sector you look at is going to be, materially higher than that. Now, not all that money is going to shift over into the gold sector, but that's the point. You only need a little bit of capital coming into this sector to greatly influence. I think the number was if 6% of the current value of cash and bonds and stocks in the equity market were to come over into the gold sector would triple overnight. So that implies there's, a lot of upside potential in our little sector.
What are the most important catalytics or milestones investors should be watching for over the next 6 to 12 months? Whether that could move gold, silver, or mining equities higher.
Well, that's a great question. The answer is there are numerous catalysts. It could be the end of the war, what the Fed does with interest rates, what happens with inflation. It's hard to handicap all those things because you have to predict those things, right? So, uh, and add in the fact that half of all catalysts, I went back, Rob, and looked at all the major events that were catalysts for the gold price over the last, I think it was 30 years I did, and almost half of them were black swans. Nobody predicted, COVID coming along. Uh, there's so many black swans that you can't handicap everything. And so for me as an investor, and the advice that we give is that you really need to make sure your physical holdings of gold and silver are significant relative to your net worth, meaning over 5%. Anything less than 5%, it's not going to impact your portfolio or protect it. Put that in place, and you have a sale price on right now with gold and silver, right? Buy your monetary insurance for $1,200 off now or whatever it is, and then watch for great opportunities on sale. I tried the prediction racket, Rob, predicting, okay, this is going to happen and this is what gold's going to do. You try that long enough and be wrong long enough, and you just realize that there's too many outstanding dynamics that can affect this market. And so therefore focus on what you can do, what you can control. And that's how much gold and silver you own and which companies you're zeroing in on.
Yeah. Well, that goes on to my next question to say, when you're looking ahead, what are you watching more closely that could either validate or a current bullish thesis for precious metals or even challenge it?
Yeah, that's a fair question. If the bull market were to end now, first of all, it would be the shortest bull run in modern history. It would be the shortest. And with all the outstanding things going on, all the potential major catalysts in store, and all the debt and things we haven't dealt with, it's my belief, based on history, that the bull market is not over. And so, therefore, we would have to somehow have an honest monetary system. We would have to somehow deal with the debt. Those things are not easy to resolve. They could be messy, and it could cause a lot of havoc. It could cause a crisis when we try to actually deal with those things. Therefore, I am forced to remain long gold and gold stocks. There's a lot of things that could potentially challenge it in the short term. But again, in the big picture, until these other issues are dealt with, I have to remain long and I have to remain invested.
Yeah. Is there any companies you're closely following at the moment, or is there any stocks that you could share with our audience that you're either invested in or looking to invest in?
Yeah, you know what? I think what I'll share with you is the three stocks that were my biggest investments in 2025. Now we're in the middle of 2026, but the great thing is because of the correction, all of these stocks are still attractively priced. They're back down to levels that I would say are major buys right now. And again, these are the three biggest I invested in last year and remain absolutely very long. First would be Pacifica Silver. That's a company that has projects down in a big project down in Mexico. I'm actually going on a site visit there in July next month. So I'll be down there and posting a lot of information about it. But I like the potential here for this company. The second would be A2 Gold. I really like the team behind this. They've had multiple successes before. That's a criteria for me. They have a resource in Nevada. The thesis there is that that resource could potentially double or more. They're going to be a major buyout target at some point if they do that. And then if you want a total speculation, Stallion Uranium, they're exploring in the Athabasca. Drill results are imminent there. So if you want to speculate on that company, you might want to do so sooner rather than later. But this team has made uranium discoveries before. This project is right next door to the Arrow deposit, the big Arrow deposit, which is going to be a mine. And yet the geophysical signature, the footprint there is actually bigger than what Arrow showed at the time before their discovery. Very compelling. It's a total spec, though. It's a pre-discovery play, so it's higher risk, but it is an overweight position for me.
What excites you about this particular bull market compared to other bull markets that you've been in previously?
Oh, good question. I mean, we've seen mini manias. We've seen teases of what gold and gold stocks can do. We had a mini mania last October. We had a mini mania in January. I don't think, we're near the end of this. The mania in 1979, 1980 lasted technically about 13 months, and we have not seen anything like that. Uh, Despite the rise we've seen in gold and gold stocks, we've not seen a mania like we had back there in the 1970s. In fact, Rob, if you chart out the correlation coefficient to our bull market versus the 1976 to 1980 bull market, believe it or not, the correlation coefficient is 95%. That's incredibly high. That's almost tick for tick. What our bull market is following to the 1970s bull market. It's incredible. And it implies that we've got a ways to go. We've got, 2 to 3 years to go, much higher gold prices. You're looking at, gold price over 7,000. Uh, and just imagine what the gold stocks can do in that environment. So I'm excited because of those reasons, and I am still investing aggressively.
Yeah. And I've heard from obviously a lot of different commentators, including yourself, that we're in the third part of this secular bull market. I wonder if you can just explain to the audience a little bit about that.
The third part of how many parts?
Three, I believe. So again, I think it's in relation to what happened during the 70s coming up to the 80s.
Yeah, I wouldn't agree that we're in the final part of the bull market. We're in a consolidation now. In my opinion, there will be another uptrend. Who knows how high it would go? I've seen projections of 7,000, 8,000, even 9,000, and all of that by the end of next year. So Who knows how high it'll go, but if you compare to the 1970s, we're 2 years in, and that one lasted, almost 5 years. So we're only halfway through if you compare to history, compare to the bull market that matches ours the most closely. If you compare to that, we're only halfway through at best.
Yeah. And I guess, again, hearing from other commentators as well, we're in a everything bubble where it seems every market is is in a bubble, apart from obviously the precious metals space. Do you agree with that consensus?
Yeah. Yes, but they were in a bubble a year ago, so who knows when that bubble's gonna pop. Um, it's a bubble, that's to be sure, and that could be, like I mentioned earlier, the catalyst that brings money over into our sectors. When that bubble pops, goes into a bear market, and there's gold and gold stocks sitting there looking very, very attractive. So, I think that could be a major catalyst for us, and yeah, that bubble's probably going to pop, and it could be ugly.
My audience is predominantly people within the mining industry. And if there's a few things that they can take away from today's conversation, what are the key messages you think they should take away about the current precious metals market?
That's a good question. I would say three things are: first of all, the current correction does not spell the end of the bull market, meaning that we have sale prices going on right now in our sector, whether it's gold, silver, mining stocks, producers, all the way down to explorers. So the sale price is on. You would only not do that if you believe the bull market is completely over. I don't believe that. This is a correction. It's a consolidation. It's healthy. It's normal if you look at history. Um, I don't know how long it's going to last, but there are going to be some sale prices on this summer. The second thing I would say is that a lot of analysts predict the Fed is going to raise rates. And it's true. The jobs report was stronger than expected. It's true. Inflation is going up. But if the economy gets as bad as some of these, analysts are predicting for the reasons why the Fed may raise rates, they may actually be forced to lower rates before this year is over, or at least not raise them. Now, who knows? They meet next on, is it June 17th, I believe? So we'll find out then what they do. But if the economy gets bad because of what's happening, the war and the effects of the war, the Fed may actually be forced to lower rates, not raise them. And the second thing is, Wall Street has yet to enter the gold equities market like we talked about. But here's one thing I want to point out that it's very interesting, and that's the buying opportunity that's available to us this summer. This week alone, there is $622 million in stock in 57 companies that comes free trading this week, just this week. That means some of those investors that were in the private placements, they're in the money, despite this correction that we've had. So they may be selling their existing holdings in that stock so they can finance buying the warrant price at a lower price. That means there could be some buying opportunities in these stocks. And there's hundreds of millions of dollars that comes free trading this summer. This is from all the big financings we had late last year, early this year, especially in January. All that's coming free trading throughout the summer, hundreds of millions of dollars. That means watch the companies that you like. And if there's a sell off because of that, that could be a buying opportunity for you. It could be a second chance for you to buy stocks that got away from you, new companies that you like, stocks that you're underweight, you might want to add to. Watch for buying opportunities this summer. Keep in mind that September is gold's best performing month on average in the year. So watch things this fall. Your buying window is open right now throughout the summer.
That's great advice. And lastly, just wonder if there was anything else that you'd like to share with our audience. As I mentioned, our audience are predominantly people within the mining industry. So they can be geologists, exploration geologists, mine engineers, maintenance, processing, etc. I just wonder if there's anything else you'd like to share on stocks, on precious metals. that you want to share with our audience?
I think I've said everything. I don't believe the bull market is over. I do believe there will be another up leg. I do believe Wall Street is going to come into this sector. Therefore, I am buying aggressively. I'm making two large investments this week alone. We have two free newsletters that focus on gold and silver. We have two paid newsletters that focus on gold and silver. We're contemplating another one. We have a premium newsletter for those who are high net worth and want to invest in private placement opportunities. Um, we each have books. Peter Kraut and I for silver. He's for silver. I'm for gold. We both have books that are available on the site. We have maps of the where our companies are all located. We're expanding rapidly. Um, we are geared up to fully participate in this bull market, and that's my mantra. I would do everything in my power to personally profit and capitalize on this bull market.
Yeah. And I wonder if you can just share a little bit about the Gold Advisor. Obviously, you just briefly mentioned it. What's involved in the newsletters for any of our audience wants to sign up and take advantage?
Well, how would you like to get a mining newsletter that covers, 20 something stocks that we personally own and recommend for free? That's what the Gold Advisor newsletter and the Silver Advisor newsletter do. Everything's under thegoldadvisor.com, that umbrella. You'll see everything there. You can sign up for our free newsletters and get, we track the news on these companies just like we would in a paid newsletter, but it's for free. And we own these, so we're invested in these, and you can get our recommendations for free. And then we have the paid newsletters. That's where you get into a little more speculative, higher risk plays, but could be higher reward. For example, Stallion Uranium I mentioned there is in our paid letter, not in our free letter, because it's pre-discovery, it's higher risk. But boy, if they hit over the summer or within the next year, whatever the case might be, you're looking at a 10 or 20 bagger from current prices.
Great. Jeff, really appreciate your time. Thank you for sharing your story. Thank you for telling us about the Gold Advisor newsletter, sharing your insights to the precious metals, gold and silver, and your stock picks. Really appreciate your time. If our audience obviously wants to reach out to you, how can they go about doing that? And also, what social media platform channels are you on?
Yeah, well, you just go to thegoldadvisor.com. You'll see contact us on the major tab there. If you write, you can write to me directly. I'll see it. It goes through our admin, but I will see the emails and I do respond to emails. Um, and then what was your second question?
Social media platform channels. Do you
Oh
go?
yeah, we're
Yeah.
we're on everything. We have a marketing manager now, and she's just been doing a fantastic job of helping us spread the word about what we do and capitalize on it. So I'm on Twitter, fairly large following there, at the Gold Advisor. Same thing on LinkedIn. We're on all the major social media channels now. We're also linked up with Mining Hub. We're also linked up with Ore Stocks. We're contemplating another newsletter. So we're growing very rapidly, but you can find us on almost every major social media channel.
Yeah, certainly. And we'll include those in the show notes accompanying this episode for easy access and for our audience to reach out and hopefully sign up to the newsletter. So really appreciate your time. Hopefully you can come on maybe on next year and give us an update on some of your picks. And obviously the market will more likely would have changed by then. So it'd be good for you to come on next year and give us an update on the
I
press.
I would love to, Rob. If we're talking not till next year, by then I think we'll have a new uptrend fully in place by then.
Yeah, great. Well, I appreciate your time. Thank you very much.
Thank you, Rob. Talk to you next time.
Thank you. Thank you for listening. Hope you enjoyed that episode. As always, appreciate your continued support. Please keep sharing these episodes far and wide. Obviously, we were speaking about precious metals and precious metals investing. I do encourage you to sign up to the newsletter just to get obviously more insights as to investing in gold and silver stocks. But obviously, this is an educational channel. So it's just educating yourself more in the precious metal space. So thank you again for listening. Appreciate your time. And until next time, happy mining.